The markets are under pressure, and the cracks are widening. Volatility remains elevated, sending clear warning signals, while yields are teetering at high risk of reversal, raising fresh concerns for the weeks ahead. In commodities, silver stands as the major reflection point, deciding whether to hold or break. Oil is plunging as the sell-off accelerates, and natural gas is powering through a sharp rally, showing unexpected strength. Meanwhile, the S&P 500 and Nasdaq are unraveling their next moves through critical Elliott Wave patterns, and the deeper we look, the more concerning the signals become. We'll also break down the S&P 500 sectors, check in on the major players like Apple, Tesla, and Google, and scan global markets for key shifts. And don't miss our special features today. Boeing, is the decline over or just getting started? Tesla struggling to hold key levels, BlackRock, early signs of a major breakdown. If you are not paying attention now, you risk missing the early stages of what could become a bigger market reversal. Subscribe now and let's dive straight into the charts while the waves are building. This is the volatility closure today. What we are seeing here is the candles are at best neutral. There is no way it is bearish candles at the moment. While in the middle of the day, when the candles were red, it was a chance to form a hammer or a gravestone doji. But they recovered by the end of the day, right now closing with a green one. And if you look at the bigger frame, for example, the 3-day frame, it's even more concerning because this is what looks like is the 3 white soldiers on the 3-day frame. And if we look at the even bigger one, 5-day is forming something similar, although the candle is not closed yet. And the similar thing is on this volatility futures, so the chances for a continued rally upward are significant. Now let's have a look at the bond market and what we are seeing here. This is a very concerning closure today. This is 5, 2, 10, 20, and 30-year yields. Candles, particularly for the 30-year and 20-year and 10-year, they are bullish engulfing, and it looks like the yields are pulling up above the 200 days moving average, which is a red line. The 5-year and 2-year, they are not that convincing, but the candles are bullish either. So it wouldn't be surprising at all if tomorrow we see a big and strong rally in yields. Well, what would it do for TLT? That's the question. TLT closed today with bearish candles. However, they are not as bearish as and as strong as the ones for the yields. But anyway, this is a bearish formation on the one-day frame and the 12-hour frame, and with the chances, very nice chances to form a bearish engulfing on the 2-day frame tomorrow. So we'll be watching it. If these are confirmed tomorrow, well, we might have a big reversal here. And if we look at our chart, what we are seeing here is possibility that this red rectangle becomes an unsurmountable rejection here, rejection area, and the TLT reverses downward. So we were looking for a potential green path 1, 2, 3, 4, 5 here, but well, we'll see. Tomorrow will be a very critical day for yields and obviously for TLT. So if TLT is, as I said, if it is confirmed, the reversal on the daily frame, and we have a strong bearish moment on the 2-day frame, we are going to look for a downward move. Now let's move on to our commodities section, and we'll start with silver. Silver closed today very nicely. I was watching until the last minute, and it wasn't clear how it is going to close. So what we are seeing here is that silver closed above this line, technically forming above the high of this red candle, technically forming a tower bottom with fair chances to move higher. And then on the 3-day frame, which also closed just a minute ago, it is a bullish candle, it is a piercing line, and the chances for move higher are significant at the moment. On the 5-day frame, it's a neutral candle, closed with a neutral candle, and I cannot guarantee that silver will survive this pressure from the big bearish candle which it formed 5 days ago, 5 trading days ago. Now what we might see, a slight move higher, and after that it will resume a downward move. That's the perspective from the candles. And now let's have a look at the charts. So with what we are seeing here is that silver potentially formed an impulse here, impulse of the bottom. So now it has two perspectives, two most probable perspectives. First is a green one to form an even bigger impulse upward, or it could form some sort of a zigzag or another corrective, like a flat, for example, corrective pattern before moving lower. So the next wave down will be critically important, and we will be evaluating it closely. Now let's have a look at Silver Trust, SLV. What we are seeing here is that this is quite a different story here, candles are telling us. If silver itself is bullish and closed with a bullish candle, signaling a move higher, this candle is not bullish at all. So it is somewhat neutral, and with it good chances to move down here. So what I would suspect, what I would think that silver might do, considering this and that, these two, it might go higher tomorrow, but not for the entire day, and it could reverse somewhere in the middle of the day, and maybe by the morning, and it might resume a downward move. That's the possibility here, and especially after considering this SLV huge candle on the weekly frame. So let's be very cautious about it. Now let's have a look at natural gas, what it is telling us. So whoever was with us, who was with us from February 1st, shouldn't be surprised at all. So silver rallied very high, making about almost 45%. Now it retraced a little bit, and now it is moving higher. The perspective right now is that this wave that silver is making could be wave 3. So more and more indicators are supporting this hypothesis. However, it is not confirmed yet. So wave 3 would be somewhere here. This would be the target for wave 3, approximately. So somewhere between 6.1 and 5.6. That's the perspective target. However, there is also a chance that this wave upward becomes wave 1, and silver enters a prolonged correction for a couple of weeks before moving eventually higher. That's the perspective. And if we look at the candles, so far everything looks bullish for natural gas. We are expecting a move higher. So this is bullish until we see a strong reversal move. Now let's have a look at oil. Oil is definitely bearish at this point. We are not seeing anything bullish. So this candle today, daily candle, it might become a bullish one, but it would require very strong confirmation. At this point, the 3-day frame and the 15-day frame, which also closed today, these are bearish, and 15-day, technically it's a confirmation of a dark cloud cover. So the next 15 days are expected to be red. Well, and now from the chart perspective, this is our chart that we are tracking since December. So it's been big move up and now big move down. So this is our expectation. This is a possible target. So far, no event happened that would change our perspective. And now let's, for the final one, as a bonus, let's have a look at the ConocoPhillips. This is the long-term chart, what we shared on January 29th when the stock was 101.56. Now it closed today with at 90, technically losing more than 10% since our call. And our target remains unchanged, somewhere between 45 and 79, depending on many technical signals. Now let's move on to the market itself, to the major indices. So what we are seeing here is technically the neutral bearish candle for S&P 500, another neutral candle for Nasdaq. This could become a bullish candle if tomorrow it is getting a strong confirmation. Dow Jones is falling, and this is technically bearish, and the IWM or Russell, it forms a candle similar to what Nasdaq did, and there is a good chance that it bounces tomorrow. I would say that Russell is strongly oversold, unlike Nasdaq, by the way, and we will see what tomorrow will bring. So far, everything remains bearish, especially if you remember we discussed the weekly closures and the 10-day closures yesterday. They were very strong bearish. If we look at the technical side of it, we've discussed this chart for a while, and this is the MACD bearish cross on the 10-day frame. So what it is more and more resembling the one that was formed on December, January 2022. So this is the perspective, and well, we will be looking for a somewhat similar move down here for the index. Now I remind that in 2022 the index lost about 27%, so that would be reasonable to expect something like this. I would like to mention that this cross technically is a little higher than the one, about 10%, so maybe around 30-35% of loss would be reasonable to expect. Now let's have a look at the chart, Elliott Wave chart. This is the one that we shared back in February, on February 23rd, and so far it didn't change a lot. Technically, this is we had a very nice impulse down and another corrective wave, and now potentially we are looking for 5500, 5400, somewhere for target for wave 3. Well, that's a long way to go. If it goes there, it will take about a week or maybe more. Now let's have a look at the bigger picture. This is the chart that we shared back in February 19, saying that this index is about to complete a diagonal. So far, this looks like the diagonal is almost complete, and the target is hit. So just a few points upward, but the chances right now that we will see a break through this line and a continued move down. From the Japanese candles perspective, this formation is a triple top. Well, now let's have a look at the major sectors. What we are seeing here, this is quite a disturbing picture, I would say. Financials is strongly moving down after a dark cloud cover we discussed yesterday, a big chance. And now financials lost the 50 days moving average. In industrials, also after bearish engulfing, they're falling and closed just a tad below 200 days moving average. Technology, nothing special here. So the break above below 200 days moving average, a 50 over 100 days death cross is looming, and the candle right now, it is more like an in neck formation, potentially a bearish continuation one. XLP finally gave up, and the staples formed a strong inside down candle, breaking the major support. I would expect a continued move down tomorrow. Healthcare also gave up to the pressure, and the strong bearish engulfing here. And we don't forget that XLV, the healthcare, formed here a 100 over 200 days bearish cross, a death cross. Let's see what it plays down the road. And the consumer discretionary, a neutral candle, technically a bearish one. Energy is trying to put a hold on the slump and potentially reverse. We'll see what will happen. If it confirms tomorrow, we might see a big bounce for the energy. And utilities are forming a strong bearish candle. So technically, only energy is potentially bearish. I wouldn't say so about technology, but we'll have a look at technology in the next chart. And just to wrap this up, technically all sectors are bearish or unconfirmed neutral. So that's a big perspective for bear tomorrow. Now let's have a look at the large players. Today it was kind of attempt for recovery. Microsoft formed a green candle, but it wasn't sufficient for a bullish reversal. It's more likely in neck. Similar for Amazon. Apple is looking down, although at the beginning of the day I thought that it's gonna be a reversal type of candle. However, it looks like tomorrow it will be even worse. Tesla is trying to form a bottom. Berkshire confirmed a reversal on the daily frame. And if we look at the 2-day frame, today frame is not available, only tomorrow we'll see. But so far it doesn't look bullish. So only on a daily frame we have a reversal here. Alphabet, Google is formed a bullish candle, which is a piercing line with some chances to bounce tomorrow. And Nvidia, unfortunately, is bearish, and Meta is also bearish. Now let's have a look at Nasdaq. This is the chart that we've been tracking since February 22nd. And when Nasdaq was somewhere here, or 21.9, right now it's 20.5, and we are not seeing a reversal pattern yet. So potentially it could be an ABC formation with a big bounce and continued rally here, but we are yet to see a confirmation for this type of reversal. So far, the blue path remains primary. And if we look globally, what we are seeing is technically attempt for a reversal by Shanghai and Hang Seng indices, but they will likely lose it. Candles are not sufficient, not strong enough. Nifty also is trying to put a hold on the recent decline, but a strong confirmation would be required. TSX is falling down. No surprises here. Australian index is the first one to lose the 200 days moving average, and this is a very significant move. Japan, Nikkei is bearish. DAX finally German index finally made a very strong move inside down, so most likely it will be continued tomorrow. FTSE is kind of neutral, and we are looking for a confirmation. Now let's move on to individual stocks, and we'll start with XLK. This is our technology index ETF, and what we are seeing here is that it continues to move down. This was our call on a top at 239.97. We made the call on February 16, saying that this is about to reverse, and this is exactly what happened so far. The index lost 9% after our call, and we are seeing potential after this ending diagonal, potential of losing about 21-22% just at the minimum. If we look at the chart, this is the one that we shared with our subscribers a while ago, and so far it is moving along. Now let's have a look at the technical aspect of it. XLK, this is our call earlier this month. What we were saying, that this is a very similar setup, MACD monthly bearish cross, similar to what happened in 2022. If this sector continues like this, follows the same pattern, it's probably going to lose about 35% and find support at the 100 months moving average. But we'll be tracking it level by level. Now let's move on to another feature of today. So this is Boeing. Yesterday, Boeing closed the 10-day frame with a huge bearish engulfing candle, and technically it reversed the recent, most probably it's going to reverse the recent move upward and move the stock towards the 100 or maybe even lower, towards the double-digit prices. This was our original call on December 24, 2023. And we said that Boeing is going to reverse, and a couple of days after that, it was an incident with a door in the air, if you remember. And after that, Boeing started to slump. So far, it is on track. Now let's talk about Tesla. Tesla is falling gracefully. This is the chart on February 1st that we shared when Tesla was 404, and we said that it's going to be 260 to 200 target based on the technical signals that we saw at that time. And well, it's not that far away. Tesla is already 272, and many critics were saying, well, Tesla would never go below 400, let alone 300. Well, technicals win. Now let's move on to the candles. Candles are bearish in general. I'd like to emphasize this huge bearish formation here on the monthly frame. And now Tesla is supposed to move lower. And it's already making a strong move on the weekly frame, flipping the 8x20 EMA bearish in a bearish cross. So far, it is below 200 days moving average on the daily frame. Whether it recovers or not, I would expect maybe a bounce here. But in general, considering these huge bearish candles on the bigger frames, Tesla is expected to move lower. And this is our chart that has been in effect since January 21st. Tesla was 420 at the time. Well, since then, it lost 34%, which is an awesome call. Well, and now let's have a look at the bigger frame, bigger chart, bigger perspective. This is something that we shared in January 11, saying that Tesla is about to lose big. So as you can see, there were quite a few signals, quite a few alerts. Those who listened to them should be feeling really well. And if we look at this one, this is the textbook case from the Proctor's book about Elliott waves, and Tesla, it looks like it is forming a very nice formation following the book. Wave A, B, and C. So the target somewhere between 240 and 140. However, I wouldn't be surprised if at all if Tesla suddenly moves into two-digit area. Well, that's about all for Tesla, and the final is BlackRock. So this is the chart that we shared just on February 12th, saying that BlackRock is about to move down, particularly after this formation. So this was a double top and confirmed double top. Now BlackRock is moving down. So the next candle, 10-day candle, will be closed on March 18. So we'll be tracking it. If we look at the candles are so far bearish, and the trend is bearish. Freshly made 50 over 100 days moving average cross, and right now BlackRock is challenging the 200 days moving average. And speaking about some technical aspects, we just saw a similar one for XLK. So this is a bearish cross on MACD on 10-day frame. We are expecting it to move lower. So where it is going to end to find support, it is difficult to say right now, but this was last time in October 2022, BlackRock found support at this is 10-day by 20, so it's a 2000 days moving average. All right. So that's all for today. As volatility climbs, yields wobble, and commodities send mixed but powerful signals, the next few sessions could set the tone for the entire month. Silver's inflection, oil's breakdown, and natural gas surge are just the start of a market landscape that is shifting fast. Tech and indices continue to show structural weakness, while names like Boeing, Tesla, and BlackRock are flashing deepening risks. We'll keep tracking every move in our daily Market Waves report, helping you stay one step ahead as the story unfolds. And don't forget, our stock and crypto package is still just $10, with daily insights on the market biggest names, plus exclusive access to our private Discord discussions. Follow us on YouTube, Twitter, Telegram, Reddit, and investingangles.com for premium market analysis and real-time updates. Thanks for watching, and as always, happy trading.